He's Peter Hugg, Director of Precious Metals here at Kitco. Peter, welcome back.
Good to be here again, Michael.
At Jerome Powell's Jackson Hole speech today, the Fed chair said he accepts higher inflation, but gold still dropped after the announcement. What happened?
Well, I think the market was disappointed with Powell. He initially started off very dovish, indicating that he would be comfortable letting inflation rise above 2%. And almost in the same breath, after gold rallied $70, he said, however, if it does do that, then we'll take the appropriate action to bring it back down so that we have an average inflation rate of 2%, which is what the policy is currently. I think the market was looking for him to say, look, we're in some trouble here. And, we hope that COVID is behind us and the economy is starting to get some legs. But in the interim, we're going to sort of look the other way and let inflation run a little bit and, without stepping in its way by raising rates and, let this economy recover and heal. And that's what I think the market was hoping he would say. And when he sort of qualified his statement on inflation, I think it caught the market off guard. And after the $70 runoff, the guys that got into the market just as he was speaking took profits, and it just basically reversed the entire gain.
This was supposed to be a big speech. Everybody was looking to it as, kind of a bellwether, a milestone. Did it live up to its billing? Did we get kind of clarity going forward, or is it still, we're still uncertain?
My sense is that the Fed is going to be much more accommodative than Powell made out to be today. And I think it's just a matter of the market to digest exactly what he said and what the intonation was. My sense is that the Fed is going to stay out of the way of this economic recovery, no matter what it takes. And in that context, I think that's very positive for the precious metals. I mean, gold has now tried 3 times to break down under 1900, and each time it has, on an intraday basis, has always managed to close above that 1922-24 sort of support level. So from a technical perspective, I think gold is still healthy, and we need to be a little bit patient, let it consolidate a little bit more, but I do not think this bull market is over by a long shot.
Last time when we talked, you said that volatility is here to stay.
The silver market traded in a $1.50 range today in the space of about 2 hours. The gold market traded in about a $75 range in the space of about 2 hours. The market is just absolutely insane from a perspective of volatility. And yes, I think it's going to continue. This market is loaded up on both sides. There are a lot of traders, but also a lot of investors that are in the money in gold. Not so much silver. I mean, there are a lot in silver that got in March in the $14, $15 range and still have almost 100% return on their investment. So you're getting a lot of two-sided action, and any type of news bite that comes out, it just creates a move. Guys that are long, that are nervous, are taking profits. When you see a dip, people that have missed the market thinking it's going to go higher jump in. So you're getting good two-sided action, and when you get that kind of chop, you're going to get volatility.
Last we checked in with you, we're switching to physical, but you were saying that the gold inventories were stable, but the premiums have not yet come down, and also there was a squeeze on silver. How do they look right now?
Gold, again, we're starting to get secondary supply into the market. Last week when we spoke, we had relatively good inventories in gold eagles, buffaloes, maple leafs. Some of the ancillary gold product was not available. Now we've got a reasonably good supply of Krugerrands, some Philharmonics, some 1 ounce gold bars, 10 ounce gold bars are starting to become more common from a source perspective. Gold maple leafs, eagles, and buffaloes are still readily available. Premiums have softened on the wholesale side by about a quarter point, so slightly, but not to a large extent. Silver inventories, again, we are starting to see some secondary material coming in. There is still a squeeze on silver eagles and to some extent silver maple leafs. And it's more a production issue, especially on the maple leafs from the RCM. They're doing inventory counts, and their staff tends to take off in the last couple of weeks of August, so production has slowed down a bit. But we are starting to see more supplies coming into the market. And if this market can go sideways for a while, I think there will be some inventory that comes in. It'll take some pressure off the premiums.
The next time we talk, we're going to be into the fall. What are you keeping your eyes on? We're going to have the jobs report next week.
Yeah, again, the jobs report is sort of a moment in time, and traders will react to the data. I think the macro picture has not changed. I think the macro picture is that every central bank in the world's got their foot to the pedal, and I don't think they're going to take their foot off the pedal probably until the end of 2021. And in that kind of context, you would anticipate with a zero sort of global inflation outlook that precious metals will continue to be good performers. You may not get a run from gold to $3,000 an ounce, but I also don't see $1,700 an ounce. I mean, $2,200 to $2,400 on the next move. If gold can consolidate here and break up 2,000, I think is totally realistic, and I expect that to probably materialize by I would say mid-November at the latest.